Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. And today we're going to do a Nike follow-up. Last week we did a Nike preview of their Q4 fiscal 2019 financial results. So this week we're going to do a follow-up because they reported last Thursday and their earnings came up a little short. But before we do any of that, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe wherever you listen to your podcasts. So Nike stock was up 2% this morning, Monday morning, along with the rest of the market on renewed U.S.-China trade negotiations. But let's just get right into Nike because we don't need to speculate on what's going on there. Nike posted adjusted quarterly earnings of 62 cents per share, which missed our Zacks consensus estimate of 66 cents per share. And this was down 10% from the year ago period when they reported 69 cents per share. And this is somewhat shocking because Nike almost never misses earnings estimates, but the stock didn't react too negatively to that. With that said, Nike said that its profits were hurt by spending on new technology and a higher tax rate than the year ago. More specifically, Nike invested over $1 billion in its apps and other capabilities during the year. This included putting RFID tags in a lot of its products, and then it increased pressure on profit margins for spending more on supply chain improvements as well. And then in terms of the top line, Nike reported fourth quarter revenue that was up 4% to $10.814 billion. This was then up 10% on a currency neutral basis and topped our estimates. So the big difference, the 4% to 10% based on currency headwinds, we should know that that's really based on a strong U.S. dollar, which makes Nike's international segment growth appear a bit weaker than it should be. So specifically, Nike said that within fiscal 2019 alone, dollar strengthening drove FX headwinds over $1.4 billion on reported revenue versus their plan entering fiscal 2019. So this is coming, that 4% growth, 10% without taking into account the currency changes, came along with 7% full year growth, 11% on that constant currency basis. So they got to about $39.1 billion. So some strong 10% top line growth for Q4 in the full year if you're not taking into account how strong the US dollar is making everything else look weaker there. So then we're going to do a little bit more on what we learned on the conference call and what might be next. But before we do that, it's good to jump into some specific business units because that's where Nike and investors really are paying attention to the big areas of growth. So in North America, revenues are up 7% to around 4.2 billion, which beat our estimates. This matched last quarter's 7% growth in the region that accounts for roughly 40% of total sales, as it has for a while. And this is the continuation of Nike's comeback in its most important region after a roughly year of downturn a year ago. And then in Greater China, revenue was up 16% to 1.7 billion. This easily passed our estimate, up 22% on a currency neutral basis. This also marked the 20th consecutive quarter of double-digit revenue growth in the world's second largest economy. Nike has a huge focus in China. That growing middle class, its fashion hubs, is really something that they are now counting on and continue to count on going forward as a big revenue and profit driver. And then meanwhile, its digital revenue was up 37% in that quarter. In China, this was fueled by the sneakers app and Nike branded experiences on platforms such as WeChat. And this is according to Nike. And then for the full year, revenue in Greater China increased 24% on a currency neutral basis. And then jumping away from China, just for some more specific numbers, footwear was up 6%, 12% on a currency neutral basis to 6.5 billion in the quarter. That's accounting for roughly 63% of sales. So once again, footwear for Nike, unlike say a company such as Under Armour is a huge majority of its business, and those it's a higher margin business, big price tags on lots of Nike sneakers, especially that Jordan brand segment. And then overall apparel revenue was up 3% and then 8% on that currency neutral basis to around 2.8%. And then overall Jordan brand was a standout on the year. Jordan brand revenue was up 12% in fiscal 2019. And then Converse was up 3% on a currency neutral basis in 2019. So for those of you who didn't know, Nike bought Converse a while back, and it's been mixed bag for the company to say the least. But overall, a strong Q4 and a strong fiscal 2019 for Nike. But now I want to get into a little bit more of what we learned on the earnings call. So leading up to the reports and over the last month or so, starting in kind of early May, Nike, along with some other apparel companies, took some hits as fears of the renewed trade war started escalating. Trump then threatened to put 25% tariffs on basically every import from China to the United States. This caused, as we mentioned last week, the footwear and apparel industry. This is Nike, Foot Locker, Adidas, all of these companies, 173 total, to say to President Trump, please try to think about not going forward with these. So those haven't gone into effect yet, and now the trade negotiations are back on. But as I said, I don't want to get into too much of that. And specifically, I don't need to get into too much of that because Nike, and obviously this is from Nike executives, so they're always going to try to paint a rosier picture than might actually be true. But they have no reason to specifically lie because then that would look bad in the long run. They are saying that they have seen no impact to their business so far from the trade war, and they don't really see one anytime soon. So if you look at their CFO, Andrew Champion, said that our exposure in terms of product produced in China to North America is relatively modest. At the same time, we see great opportunity to continue and potentially expand the production of product in China for China and other markets. So they're going to produce more in China and sell it in China and then sell it to other maybe Asian markets as well. So they don't see a huge impact there, as I mentioned before. And this is coming from Mark Parker and the CFO as well. And then in terms of what else stood out in the conference call, they noted that China overall was driven by sportswear, basketball, the Jordan brand, and then running as well. And this, as I mentioned, it's a big market that Nike and analysts and Wall Street really are focused on for that company's growth going forward, along with their digital business. And then Mark Parker also talked about how they're trying to learn more and more by partnering with different organizations and companies in China of what sells in China. So he was saying, this is a paraphrase of a quote from the conference call, we're not trying to import Western concepts in China. They're now trying to build a more Chinese-focused Nike product in that market. So that could be a big help going forward. And then Nike and Mark Parker, who's the CEO, also talked about how their women's business has been great over the last year. He said that the women's business led by the women's offense at Nike grew double digits in fiscal 2019 and it accelerated in the back half of the year. He said that they're, quote, moving the needle through thoughtful design, powerful brand messages, and digital-led distribution. That's fluffy language, but all you really need to know is women's brand is up big for Nike. They obviously talked about the Women's World Cup, which is going on at the moment, and they noted that 2/3 of the team are Nike. 2/3 of the teams are Nike teams. This is a headline that's been going all around from this conference call, but it's worth sharing just for how impactful this women's soccer team is for Nike's business overall. That the U.S. women's home jersey is now the number one soccer jersey, men or women's, ever sold on Nike.com for a one-season period. So that Nike ability to sponsor Team USA women's soccer has been a good business, and it will likely continue to be that way going forward. And then in terms of things that will really matter for the company in the long run, North America, China, And then its digital business is really going to play a huge role. So its digital sales were up 35% in fiscal 2019. And then Mark Parker and the CFO also reiterated the company's expectations that digital transactions will comprise about 30% of Nike's business in 2023, and that's up from around 15% right now. So they noted that in the first half of fiscal 2020, this upcoming year, 2020, which is even just a weird thing to say, they expect to launch their Nike app in China and in 13 other markets in the Europe, Middle East, and Africa. So they're expecting to add hundreds of millions of people to their Nike app pool. They also noted, as I mentioned at top, they've placed RFID chips in nearly what they're calling nearly all Nike footwear and apparel, which is hundreds of millions of products. And for those of you who don't know, that's a radio frequency identification tag, which is kind of, in the simplest terms, an intelligent barcode that lets companies track their products more easily. And so this is a quote from Mark Parker on why this RFID thing will help the company long term, kind of quicken their go-to-market strategy and really just know what consumers want. So he said, RFID gives us the most complete view of our inventory that we've ever had. It's quickly becoming the most precious tool in our arsenal. And then he goes on to say that we'll launch that across 20 new locations in Q1. And then they're also going to work with, in the future, they're going to work with some of their brand partners, some of their wholesale partners. This is companies like Foot Locker, like Dick's Sporting Goods, like Nordstrom. So slowly that RFID in really knowing what's selling and what they have in stock and what people are buying is going to be a big part of their business as everything kind of gets smarter in this Internet of Things age. And then we should note that Nike Direct drove roughly 50% of incremental revenue growth, and then they kind of see that continuing to be a long-term growth driver. This is that digital direct-to-consumer push. And then in terms of fiscal 2020, they're expecting what they call broad-based growth across all four of their geographies. So we'll see what really happens over the next year. But in terms of our estimates at the moment for Nike, our estimates are calling for roughly 7% growth this current quarter, so Q1 2020, which would kind of fall in line with what Nike has done over the last several quarters. And then for the year, we're calling for just over 8% growth for fiscal 2020, and then another 8% growth on top of our 2020 estimate in 2021. So some strong, nearly high single-digit growth. Maybe if they beat, they could get up to that 10% again. And then we're also going to see, we're expecting to see 17% earnings growth this year. And then the following year, we're expecting to see 19% growth above that. So that's a good thing to see as they're spending more now, which on their digital business and all of this RFID and streamlining their supply chain and all of that all of these companies are trying to do to get their digital business to be the focus. Just the more technology they have, just knowing where things are, that's their plan going forward. That's where they want to be. So we're calling for some solid growth on the top and bottom lines over the next several years. But in terms of you could do all the digital revamps you want, but Nike still at its core is a strong business based on just the cachet that Nike brand still carries all around the world, and it's growing seemingly on a daily basis, as we can tell that it continues to grow in North America, continues to grow in China, continues to grow all around the world, but those being the two big markets that matter the most. And this is all coming at a time when you could say that companies like Lululemon and Adidas and Puma and some Gap-owned brands are rolling out more products to compete with Nike than maybe ever before. So Nike has been forced to innovate maybe more than it would have. Not saying that they wouldn't continue to grow and push boundaries and be that brand that Nike has been for several decades now without this push, but in that digital age where brands can kind of grow on places like Instagram and social media platforms, where now Facebook is determined to become more of an e-commerce focused company. So they have 2.7 billion users, and now they're going to try to roll out a cryptocurrency and have people buy things directly from them at all times. So Nike being a part of all of that growth is important going forward for all of these brands. But as I've said now a bunch of times, Nike has they're still the industry leader, even though Adidas has encroached on that business, Lululemon, all of these companies. So they seem to have a solid plan going forward. Digital, China, direct-to-consumer push, mixing that fashion with sports at all times while still owning that hardcore sports in basketball, soccer, football in the United States. And then, as I've mentioned before, they're really focused on those 12 regions, 12 cities throughout the world where they see their growth then trickling throughout the rest of the country if they can grow in those 12 big cities. And then just to close it out, Nike stock is up roughly 16% year to date, which is falling just behind the S&P 500's average climb through the first 6 months of the year, the first half of the year. So it'll be fun to watch what new comes out of Nike, but they ended fiscal 2019 on a solid note, and they're expecting big things going forward. So that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.